Now let's talk about Trump's trade war with India. The tariffs will kick in later this month, but for India, the costs are already mounting. Different parts of the economy are feeling the Trump effect. We'll start with the markets. Foreign investors are pulling out. They're dumping Indian equities. And how big is the damage so far? Nearly 18,000 crore rupees. That's more than $2 billion US dollars. This is the money that's already been pulled out from Indian stock markets. And who are these investors? FPIs, foreign portfolio investors. They've been turning bearish on India. This year alone, they've withdrawn more than 1 lakh crore rupees. 1 lakh crore rupees, that's over 11 billion US dollars. And why has this money been pulled out? Because investors feel that Indian markets have become more risky. And three factors stand out here. One, escalating tensions between the US and India, especially on trade. Two, disappointing earnings from India Inc. And three, a weakening rupee. You put these three together and the result is fragile sentiment and investors looking to cut their risk. This is hurting all businesses, but especially exporters. They face multiple challenges. For instance, banks are not sure about lending to them. Their loan applications are facing tougher scrutiny because now banks want to know if an exporter has dealings in the US, how big is their exposure, and what are their contingency plans. At least 5 large banks have put in place such checks. And 3 sectors in particular face intense scrutiny: textiles, gems, and jewelry. These are all export dependent and they face significant risk from the Trump tariffs. So it's understandable that banks are being careful with loans. And exporters too are trying to address these challenges. They're reworking their strategies. Some are shifting output from India, others are expanding in different markets. And a few of them are also exploring acquisitions in the US. We told you about all of this last week. Plus, they're also seeking government support. Industry bodies have asked for a range of measures: financial relief, refund on duties, deferment of interest on loans, penalty-free loans, and more. And the government is mulling all these options, including direct intervention. So expect an announcement on this front soon. For the moment, the RBI is doing its bit. RBI is the Reserve Bank of India. It's India's central bank. It has taken steps to defend the rupee. This month, the RBI sold dollars from its reserves. The aim is to stabilize the Indian rupee. How does that work? Like most central banks, the RBI holds dollars in its reserves. Now, when the rupee weakens, the bank sells those dollars in the open market and buys rupees in return. This pushes up the demand for the rupee and it helps lift its value. This time, the RBI has swapped $5 billion for rupees, and that helps strengthen the Indian currency. Last week, the rupee had fallen to 87.89 against the dollar. That's close to its all-time low. And this happened after Trump doubled the tariffs from 25 to 50%. You see, it's been a difficult year for the Indian currency. It's among Asia's worst performing currencies. The rupee has depreciated more than 2% this year, and roughly half of that fall came in the past 2 weeks, when Trump stepped up his trade war against India. And the recovery has been marginal. Today, the rupee was trading at 87.73. If it gets weaker, it could have sweeping repercussions. Yes, it can help exporters. It can potentially boost their earnings. If they do business in the dollar, they will earn more in rupees for their export. But in the present scenario and context, a weak rupee will do more harm than good. It can make India's imports more expensive. And this could increase inflation and have a ripple effect on India's growth. The tariffs will come into effect on the 27th of August. A deal with the US is still possible in the meantime. If not, India will have to brace for impact and build resilience.